Hello everyone. Today let's have interesting discussion on golds versus stocks. So many a times we feel gold is better or sometimes we feel stocks are doing better. So let's look at the data and see how both have performed. So for this I did an extensive research on different articles, and one of the article from Money Control I found it very good. So I have tried to share a few points from that article. So let's deep dive into all those aspects. So for understanding gold, this graph I believe is the best example wherein we can understand how gold has performed for last 20 years. So on x-axis we have years over here, and on y-axis we have the returns of gold and Nifty. So for gold they have considered as MCX gold, and Nifty 50 they have considered. So if you look at this graph, the most important 4 points are there. So first point is a 20-year CAGR return. So for 20 years, gold has given 11.96 return and Nifty has given 12.7. So for 20 years period, Nifty has performed better by around 0.8%. Whereas for 10 years period, gold has given 8.8 return and Nifty has way past and performed very well with 12.8%. Now again, when we go to the 5 years return, then here the gold again has given good returns. So for 5 years it is 16.21 and Nifty has given 13.95. So this data is from March 2005 to March 24. So maybe for this year also we can say gold would have performed very well compared to Nifty. Now one another interesting point over here is, look at the gap of both the graphs. So whenever gold has done better, like whenever gold has done better, Nifty has slightly underperformed, and whenever Nifty has done better, gold has underperformed. So for example, here you can see the blue line is Nifty. So here we can see gold has done underperformed, but then again it has outperformed over here. Similarly over here, gold has outperformed and Nifty has underperformed. And similarly, this pattern is repeated across for last 20 years. Now, one thing to keep in mind is these are the past results, so they don't guarantee future returns, but this can be a good learning point for us, that how it has performed for last 20 years, and we can keep this in mind and base our investment on these points. Okay, so over here, what we have taken is this is year-wise outperformance or year-wise performance of gold and Nifty, and in this column we have jotted down the outperformance of gold. Now, one of the striking point over here is, whenever there has been outperformance even from Nifty or gold, that is replaced by the other asset category. So, for example, here Nifty has outperformed, and next outperformance didn't come from Nifty but from gold. So I'll just change the color. So here again you see Nifty has outperformed drastically by 65%, but then the next outperformance came from gold. And more or less, whatever has been the outperformance, similar has been the next assets performance. So here Nifty has performed very well, but then next 2 years gold has performed very well. Then again you can see this pattern over here. Nifty has performed very well, gold has not performed. Then here again gold has performed, here again Nifty has performed. Now this here you can say this two outperformance came from Nifty, but then again here if you look, gold has outperformed tremendously over here, but then again Nifty has done better in 21. So this this thing you can clearly see every time this is happening. So what can we learn from this? So basically, at least what we can do, if we have invested in one of the outperforming asset for that year or for that 6 months, we can keep, maybe we can we can do one thing is we can keep that invested money, and for next investment we can look at the other asset. So for example, if you have invested heavily in Nifty for 1 year and that outperformance is good, then maybe next year we should focus on gold and vice versa. So based on this, what approach can we take? So for this I have taken three different approaches. These numbers you can change based on uh, your knowledge or based on what you feel. This is just a suggestion, not a recommendation. And again, I would suggest please do your own due diligence before investing. So do keep that thing in mind and take help of investment advisors. So here what I've done, I have taken three approaches wherein I have invested in Nifty Bs. So for first approach, it is 40% in Nifty Bs, 10% in small caps, and 50% in gold. In second approach, I have taken 50% in Nifty Bs, 20% in small cap, and 30% in gold. And here, this is a more aggressive kind of investing wherein 20% in Nifty Bs, 50% in small caps, and 30% in gold. So for this also, what I can say is we can look at these ETFs. So Nifty Bs is basically investing in the Nifty 50, basically replicating Nifty 50 stocks. Then HDFC Nifty Small Cap 250 ETF is for Nifty 250 index, and Gold Bees is for gold. So here this ETF investing can help you uh, with the expense ratio will be very less. So less expense ratio for these. Or if you want to have a different approach by investing in mutual funds, that also you can do. So instead of ETFs, you can replace this with large cap, small cap, and gold mutual funds. So yeah, like you can have these different approaches and try to have best fit for you. And hope this video helps you. Again, do your own due diligence before investing. Hope you like this video. Do share and subscribe to my channel. Thank you.